Good morning, everyone. This is Daily Trading Analysis with a market recap from yesterday with huge news today. As you know, the markets sold off yesterday due to the Fitch agency rating downgrading the S&P 500 from AAA to AA plus. We are going to review those news, but also the ADP employment in screen and also the earnings from AMD. First, we're going to check the ADP employment change. 324,000 was way above the 189,000 consensus for the employment change. This still shows that labor market is super strong, and if we see the trend, we are not seeing any decrease. So maybe the Fed will not cut as soon as possible, as soon as the market are expected. Let's see what happens. 30-year mortgage rates continued ticking higher below 7%, but a tick higher from the 6.87% that we got previously. Mortgage application continued to drop -3%, and the refinance index also trying to keep pace of the higher interest rates. So let's see what happened next, but everyone is waiting for the peak, for the terminal rate to, I think, refinance and apply for one mortgage rate. Now, AMD, Tuesday after the close, yesterday on Wednesday, we got the reaction. Today, Wednesday, we are going to see PayPal and Shopify consumer discretionary after the close, and the big ones, Amazon and Apple, today after the close. So AMD earnings report better than expected results, even as PC market shows continued weakness, but let's see the details because they are quite important. 58 cents per share adjusted versus the 57. This is a slight beat, 5.36 billion versus 5.31. But the thing is that AMD said that it expects 5.7 billion in sales, while analysts were looking for revenue of 5.81. As always, expectations is everything. Chipmaker said that it expects its data center and embedded divisions to grow on a fiscal year basis. Also, reported net income of 27 million or 2 cents per share, down from the 447 million. So big drop there. AMD total revenue dropped from 6.55 billion a year ago, marking a second straight quarter of decline. And this is the thing. Going forward, we see AI as significant PC demand driver as Microsoft and other language providers, they are trying to push with AI speech. But I think the big declines also in the data segment, a decline of 11%. Some cloud providers had extra inventory into the quarter, the Chipmaker says, so they didn't have so much demand. And also for the gaming segment, for processors for PC as well as chips, sales individual dropped 4%. So I think those are not good news for AMD, and the outlook is not good. And we saw a decline of 7% on the day. 7% on the day. Quite big. We got the reaction here, the earnings, and then during pre-market, we were trying to creep higher, but at the open, look at this. I think this is somewhat related with the earnings, but the thing is that everything in the market, as you can see, all the banks, all the stocks, tech stocks, and also everything but the dollar went down on the markets yesterday. Metals, big drop yesterday. And we are going to have to think about this AMD earnings in the context of the big news that dropped yesterday from Fitch that downgraded the S&P 500 from AAA to AA plus. And I understand this. We all understand that the repeated debt-leaving political standoffs and last-minute resolutions have eroded the confidence in fiscal management. It's all about management. In Fitch views, there's been a steady deterioration in standards of governance of the last 20 years, including on fiscal and debt matters. And the thing is that Fitch highlights the fact that the debt government general deficit will rise to 6.3% of GDP in 2023 from the 3.7 of last year. So this is the thing. This is not the first time the agency has downgraded the S&P 500. The other time that it happened is in 2011. So let's quickly see what happened. That was in August 5th. And let me change the daily. It's not for AMD. Let's go to the XPX and let's check that. So this was the drop. The news drop on this day, 5th of August, Friday, and on Monday, we lost 6.66%. So there was a couple of weeks of turmoil until October in which we tried to move higher. And then into 2012, we keep moving higher. So a lot of banks, I think, are trying to say that this is not as bad as we may think, but for sure the reaction is there, and there are some technicals that we have to take into account. This is the daily Nasdaq chart, and from this, the high of year, the high of July 23rd, and as you can see, we now did a lower high on the daily, and this lower high is going to be quite interesting because this was a series of higher highs, higher lows, and coupled with the fact that we can just we were trying to keep the trend extension because we were already extended from the lows on January. So we are now breaking down after a lower high and putting a new low, fairly low, that got swiped. And this pivot, remember that I talked about this pivot in previous videos, 15,475. This is critical. This is last week low. This is the neckline, the support. Again, on this range of breakout ascending triangle that we did here. So this pivot and this support is critical. If we start seeing this kind of move and accepting below 15,500, I think this is going to cause a lot of pain. So it's not only the news, it's also some technicals and some other markets that are starting to push levels that are not good for stocks. This is the Nasdaq, and the S&P is also breaking this pivot. It's not yet at this level of support. It has a little bit more of distance towards this support, so it's not as bad, but tech for sure it's there. We need to find support down here. We need to perhaps swipe a little bit and do a false breakdown if you want to stay bullish. But if we start seeing these kind of things and rejecting these levels and keep moving lower, we might see something like this for sure. You might see a relief, then the breakdown again, and the resistance in here. So we have to be open about everything and all setups up here, but there are some things that are starting to look a little bit worrying. Maybe the change of direction is now due to this Fitch downgrade. So this is for not only for the Nasdaq index. Uh, Individual stocks are also pulling a big red days. Apple is quite in the red. It was not the first candle that on the daily we did that big of down day, but Microsoft is really weak after all the AI mania. Tesla, Tesla is, I mean, it has a lot of gaps to fill. And it's quite worrying the number of red days that Tesla had since earnings. Amazon, also consumer discretionary, put in a minus 2.64% of the day yesterday, quite big, and now leaving behind a gap that we have to track. So we are going to mark that. And this week is going to be super interesting, but we have to manage our risk at best. Let's review some other gaps. Microsoft, no gap. Apple, a little bit of a gap, but doesn't matter. Google tried to fill the gap down, then dropped lower. Google still minus 2.46% on the day. But this is a huge level, so be careful. We are trying to fill this gap down. Nvidia minus almost 5% on the day. Look at this huge candle. This micro gap got filled finally. And let's see if we see continuation lower like this to the next gap. Finally, Meta minus 2.60, still holding the previous gap for after earnings. And let's see what happens. So this is the stock market, the banks, as we see, the JP Morgan minus 1%, Bank of America minus 1.40, Wells Fargo minus 1.40, Morgan Stanley minus 1.80, Goldman Sachs minus 1.85, banks overall, XLF, good dodgy, but I think also regionals were a little bit pulling back. So be careful with the banks because the downgrade on US may impact a lot of them. Now let's talk about metals. Look at gold. I was expecting gold to start building some kind of trend upwards towards 2000, but this rejection, two big candles, minus 1.50, and then yesterday finishing, if we see the 1 minute chart, it tried to go higher. It tried to maintain, but at the open, it just couldn't. So this was the minus 0.26 on gold. I still think we might see some 2000 break, but we have to start looking about this previous breakpoint support. Copper, big rejection. Look at this. 2 days of minus 2.62% and minus 1.60% yesterday. So big rejection on copper. As you know, I talk about copper. Dr. Copper is the heartbeat of the economy. Copper is used in a lot of spots in the manufacturing chain. So copper going down, it's a bit concerning for the worldwide economy. So watch copper. We are still trying to bounce. We'll see if it bounces up here in this huge wedge that is forming. The first attempt was rejected. So, and silver. We were quite happy watching this bounce of the fib retracement, but now that bounce is gone. And after two big metals are being destroyed. Yesterday, minus 1.33 on silver, and today is already minus 0.83. That's the thing. That stock market is going down, metals are going down, small caps are going down, Bitcoin is going down, rejecting the previous support and the previous range. At this, rejecting this minus 1.80, and dollar is the one pushing. We were watching this 50 retracement as resistance, but it's not anymore resistance. Now we have to look towards this support that was broken in here, there. This support, this wedge that was broken down, and then we bounce. We reclaim parity 100, and we are now here. Let's see what happens here. Huge push from the dollar, and also yields. The 2-year yield is chilling up here, 4.9. So as long as we don't push 4.98 and 5% plus, everything is under control. If we start seeing this push, markets will for sure freak out. The 10-year, look at this. 10-year is breaking out 4.1%. Right now, 4.138. 1% in the green. And that's why treasuries are feeling the pain. This is a huge breakdown on treasuries. This breakdown, and also look at this. Look at this day, minus 1.07 on the day. High yield corporate bonds are being rejected also. So quite an interesting week of moving markets towards another sentiment. Is not everything as bullish as it was. We are seeing movements towards dollar, towards yields, and I think the money outflow and the selling pressure on stocks and tech stocks overall are something to take into account. And that's why I'm trying to review some other markets to really see how was the sentiment. Right now, after the big sell-off yesterday, we are not breaking up or bouncing. We are just in the middle of the lower range of yesterday. We are in range, in value, below this blue dot line that is last week low. But for now, let's see the 30-minute chart. We are just consolidating down here. And this is the thing, down here. Yesterday was a clear day because since the beginning in pre-market, I think a lot of people was expecting this downgrade because it already started going down heavily in London Open. And you can see in the 15-minute chart, we were rejecting yesterday's low one time and second time. And then at the open, I think big players stepped in and they started selling and selling and selling and selling and selling. There was no opportunity for a bounce, at least in the Nasdaq. The S&P's got a little bit of power, but at the close, we just close almost at lows. And we are at these lows in pre-market. So adjust your expectations because today, after yesterday's selling day, we have to really manage our risk and take also into account that there are some news today. ISM Services PMI at 10 a.m. It's quite important. Jobless claims to really see if labor market is still tight. And on Friday, the big ones, unemployment rate and non-farm payrolls. So the expectation is for non-farm payrolls to tick lower and unemployment rate to keep that pace 3.6%. But everything is in the context of this Fitch downgrade, so be really careful today and the rest of the week because this might impact more than some people are trying to say. JP Morgan CEO Jamie Dimon calls Fitch ratings ridiculous. And it says that it doesn't really matter. Well, it might not matter, it could not matter, but the thing is that the markets sold off yesterday and we have to adjust to that. The selling pressure was there and there was no opportunity for a bounce. It was a heavy, red day yesterday across all markets, across all stocks. And that's the thing that is most important to me. And I think you have to really pay attention to that, focus on that. And if you want to keep bullish, there are some spots, at least on the Nasdaq, that we have like support. We are there. We cannot continue lower because then we enter in a position in which there's free fall potential. The S&Ps, we are not that bad. We have still margin, but we have to really see this range also of 4,500 S&Ps. So let's see what happens. Be really careful today. Be disciplined. Manage your risk, because this thing this week is really difficult, really tricky to trade. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, and thank you for your support. It always makes me really, really happy that people watch the video, people subscribes. So thank you for all the subscribers, for all the likes, because I make these videos for you to really share my perspective, my approach to these markets. And if you learn something today, that's all I want. Because I also started following some people and learning on my own. And if I can share something, I can share some of my knowledge with you, and you can start trading, and you can start practicing, and you can start making money in these markets, or at least understand this complex environment. That's all I want. So thank you for following, thank you for watching my videos, and remember that discipline and risk management are key. Discipline and risk management are key. So thank you everyone, stay safe, and let's see what we can do today. Really tricky day, and I will be with you again this afternoon at close. See you then.